The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Hey, good afternoon. Hey, good afternoon. There was an echo in the studio, so fix that. All right. A question just popped up in our discussion group this is not the regular daily broadcast. This is not the live trading room. This is just a real short video to talk about one tool that comes with almost every platform, and it's called the Fibonacci Price Extension Tool. We were sharing charts in the discussion group as we do, and by the way, if you are on our trial, you should be participating in the discussion. That's an important part of the trial because you not only can ask questions literally around the clock, you'll be able to bump elbows with many of our other traders, some who've been with us for many years. If I'm not around, Michael's not around, Valerie's not around, plenty of people in the discussion channel that have learned our methodology. They understand our setups, our indicators. They can probably answer the question just as well as I can. Now, I showed a chart with using the Fib extension tool, and one of our new members was not yet familiar with that. He said, "You got a video I can watch?" And we got a video for just about everything, but off the top of my head, I couldn't remember where such a video might be. And I thought, rather than spending 2 hours digging it out, how about I spend 5 minutes, 10 minutes, just showing you how to use it. Now, those who were in the discussion group when this all started, you have access to the chat so you can ask questions. If you're watching this stream live on YouTube, not so much. Okay? So tell you what, if you're listening via YouTube, Facebook, or Twitter, you can do this. You can go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that not only will give you access to our show each and every day, but it will allow you to ask questions right now while I'm broadcasting live. And if you listen to this after the fact, well, take the trial at eminitrainingschool.com. That will give you access to the discussion group, and you can post a question there, later on, after the fact, tomorrow, next week, next month. We've been archiving our shows, our daily show, every day since 2005. Yeah, that's back before video. That's back when a podcast was actually just spoken voice. I think it was around 2010, 2011. We actually added charts, and that brought a whole new dimension to the show, because before that, people had to listen to us, the host, the co-host, the guest, talk about what we were seeing on our charts, and then you would look and try to find the same things on your chart. But now, God bless technology, we can just share our charts, and so whatever I'm looking at on my desktop, you're looking at it too. Now, let me see if there's anybody posting anything just yet. Okay, I'll try my best to keep an eye on the chat box. Now, when people make comments, this thing kind of, it rolls over, and so if enough comments come in, your question might roll up out of view. So if you do ask a question and I don't answer it within just a minute or so, copy and paste it back into the box, so that'll get my attention, and we'll get you an answer to your question. Okay, I'm not going to go into a whole long drawn out deal on fibs, which, as you can see, we've been using fibs here. Let me just go to a clean chart. Yeah, that's pretty clean. Okay, this is set on the euro. Most people, most new traders anyway, seem to gravitate to the S&P 500 Emini Futures. Why? That's a good question, and different people will give you different answers. I think probably we've all just heard that's what you're supposed to do. In fact, some people, when I mention that there are other E-minis, they are surprised. Well, no, I'm talking about the S&P 500. You know, the E-mini. Well, yeah, but there is also a Russell, a Dow, an NQ. Those are indices. You see, when the markets, when these indexes, as they are, were first created, SPX. How about SPX? There we go. You may have heard people use the term cash market index. Okay, this is an index. This is the S&P 500 large cap companies that are members of this exclusive club, not just because they're a large cap company, but there's a whole other list of qualifications over at Standard & Poor's that a company, must meet before the vote is taken, and they're included. Now, I'll say something you may not have heard before, unless you listen to the show. This index, along with the Russell and the Dow and the NQ, over time, it's always going to go higher. Now, that's a big word in the world of trading, because very few things are always. Now, the reason that's true, this is what's called, or what I call, a best of breed index. In other words, if one of these 500 companies gets sick, misses their numbers a couple of quarters, comes under fire for any kind of reason, they will be culled from the herd. They will be shown the exit. Now that would leave only 499 companies in. Well, obviously they're not going to change the name of the index to the S&P 499. So they got to find a new, fresh, strong bull to replace the company that fell on hard times. In doing so, over time, this index will always climb. Now, this is daily. Let me put it on monthly. Okay. Now, yes, there are retracements. Yes, there are pullbacks. That's a healthy market. A healthy market does exactly this. A leg and a retracement, and a leg and a retracement, a leg and a retracement. Leg. You get the idea, right? And there will be points along the way. Oh, like back here. This is 2007. There's 2000. It's October of 2007. Here's the beginning of 2008. And if you've been trading that long, gosh, 12 years ago, seems like yesterday. It's a pretty healthy drop. Okay. Now, what happened is price dropped to support. Spiked it a little bit, and then began to climb. Arguably, the biggest bull rally in the history of the markets. So, there will be pullbacks, there'll be nail biters, there'll be extreme drawdowns like this, but not to worry if you stick with the indexes. Now, somebody out there going, wait a minute, is this guy trying to tell me that if I just buy the S&P and just hold it over time, I'm going to make money. Well, yeah, crazy as that sounds, it's true, because that's how the index is built. Now, what I originally set out to explain about the index is where you can't trade this. Okay? Well, sure I can. I trade it every day. No, you trade futures, ETFs, options. There's a number of derivatives created so that man could trade the index. As you know, futures trade around the clock from Sunday evening at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. You take an hour break every day from 5 p.m. to 6 p.m. Eastern. Yeah, they got to sweep up, empty the ashtrays, that kind of thing. Restock the supplies. And today being a Tuesday, when the markets reopen here in about 20 minutes, even though it's Tuesday night, that will be the beginning of the Wednesday session. Okay? So while you can't trade the index, you can trade the futures, the options, the ETFs. Now the futures in particular, that's what we focus on. If you're watching this thing when the market closes, when stocks stop trading, it goes quiet. And it doesn't move again until tomorrow morning at 9:30 a.m. Eastern. Stocks drive futures, not the other way around. Now, when the stocks close at 4 p.m. Eastern, futures keep trading until 4:15. Then they have a mini break of 15 minutes. They reopen at 4:30 and trade another 30 minutes until 5 p.m. Eastern. That last 30 minutes of the day is usually pretty quiet, but there hasn't been a whole lot of quiet of late. Anyway, at 5 p.m., then even the futures go dark, but only for an hour. 6 p.m., they reopen. That's why we love futures, because, oh gosh, there's just so many reasons. One, there's no market maker. It's purely electronic. Whether you're a retail, one contract trader, or you're a big dog over at Goldman Sachs and you routinely trade 1,000, 2,000 contracts, you get the same respect as the guy from Goldman Sachs. No discrimination. That's just one of the nice things. Also, the other nice thing is because the market trades around the clock, let's say you like to travel. Maybe this week you're in Paris, then you're in Berlin, then you're in Idaho. Well, whenever you have time to trade, you break out your charts, you go to the markets that you like, and in the past, the Globex market, this night market I'm talking about, it was called a shadow market. Nothing eventful really took place there. Certainly you never saw the beginning or the end of major moves in the market. Well, that's changed over the last few years. In fact, it's quite commonplace to see the beginning or the end of a major move in the market happen during the Globex session while most of us are sleeping and while stocks are sleeping. Okay? That's why at 9:30 in the morning, when the stock market opens, we see these gaps higher or gaps lower. It's because the market, even though the stock market was closed, the markets have been open all night. Okay, so we understand the cash markets, we understand the indices. Now we're going to talk about the most important thing, price. Doesn't matter what market you're trading, doesn't matter what time frame you use. The clock on the wall is always price. Everything we do is based on price. Now we have some tools that we use. I'm not going to get into all those, not our proprietary stuff. I just want to show you this one thing. Okay, we'll use an S&P chart. It popped up with a 30-minute, so we'll use the 30-minute. Okay, Now, most everyone is familiar with this tool, Fibonacci retracements. You take the most recent significant swing low on the chart, and this double bottom will serve beautifully, because I think we'll all agree this is a leg. A leg, a retracement, a leg, a deeper retracement, a leg. That's how markets work. So with the retracement tool, you just go from the swing low to the most recent swing high. Okay. Now this is all based on like 14th century math. If you've never studied Fibonacci, you don't need to spend thousands of dollars on a course. Just do a couple Google searches. Read some of the stuff over at Investopedia, or book a mentoring session with me. If you're on our trial, you can book a mentoring session at no cost. That's included with your trial. And again, the address for the trial is eminitrainingschool.com. So with the standard Fibonacci retracements, what we're looking for are areas where the market may find good support and catch a bounce or a reversal. So from the low to the high, this first retracement was to the 24% Fibonacci retracement. Now I've got my chart set up so it shows me not only the Fib level, and these are the only ones I use. I call this the 24, the 38, the 50, the 62. Okay, there's another one down here. Yeah, for reasons I won't even go into, I've chosen just not to embrace that one. So we get this nice move up. We retrace to the 24% Fib. It holds as good support. It bounces us back up to the swing high. So now we got a double bottom here. We got a double top here, and this is on a 30-minute chart. Okay. Price bounces again off the 24% Fib, but this time buyers don't have enough of the right stuff to go all the way up and challenge the swing high. So we roll over and we come to the 38% Fib, where we linger for a moment and then we drop to the 50% Fib. 50%, 28.1962 is the price. That is exactly halfway between the low and the high. The 50% Fib, most Fibists will agree, is the best place to catch a bounce from. 38 sometimes considered too shallow. 62 means there's weakness, but everybody seems to love a 50% Fib bounce. Now, some of the most commonly watched charts for intraday traders, day traders, would be the hourly or the 5-minute. When I first started trading futures, I was always looking for the secret. I wanted to know some kind of secret. I wanted to know something that nobody else knew, because that would make me, well, I don't know, awesome, right? Found out that wasn't true. What I found out was I really wanted to see what the most other people saw, because people who've read books on trading, Technical Analysis 101, if price does this and pulls back to the 50% Fib, well, they've been taught in books and videos, probably even in poetry, that they're supposed to buy and go long. Almost like a Pavlovian type of thing. So, could a person just buy every 50% retracement? Well, you could, sure. Some would be profitable, some would not be profitable. And there's nothing wrong with buying a 50% retracement if, once you retrace to that Fib, price actually starts to move higher. Just simply parking an order down here at the 50% Fib and then going golfing to come back later to find out what happened, and that's what I call risky business. Because as you can see, let's say we were 38% guys, and we really feel that the 38% Fib is the best one to catch a bounce on. So we parked an order here, went golfing, came back, only to find out, yeah, the market did go higher, but it didn't stop at the 38, it continued to the 50. So we're driving home from golf. We hear on the radio maybe what the closing price was, and we're like, woohoo! Only to get home and find out that woohoo just turned into, oh man. Because yeah, it did bounce higher, but it continued lower first and stopped you out. So we catch 38% bounce. We come back, 38% gives way, or I'm sorry, we catch a 50% bounce. Then we pull back into the 38 and bounce. Then we come crashing down through the 38. We overshoot the 50. We almost get to the 62. Catch another nice leg. Now you may have noticed that's not a perfectly drawn trend line by any stretch, but you get the idea. We are in a down trend. Okay, so then price comes back to the 62, bounces up almost to the 38. This time we overshoot the 62, we pull back to the 62, and then the 62 from the 62 we just have a whale of a trading session. Okay, now that's what everybody's mostly familiar with, fib retracements. Okay, if you want to know how to trade fib retracements, again, you can just book a session with me. Go to eminitrainingschool.com, take the free trial, no credit card required. You'll have access to our live training room. You'll get to use our indicators, our platform. You'll receive our alerts, both the concierge and the logic. One's a static report, the other one's live 24/7. So you get all that for a week, no credit card required. Okay, I said what I would talk to you about today in this video was the Fibonacci retracement tool. All right, so this works a little bit different. You see, when we drew fibs from the low to the high, we were looking for areas on the way down that might serve as good support to give us a trade to the upside. So we're going to do something a little different here. We're going to grab this tool, Fibonacci price extension. We're going to go from that high down to this swing low. Now, you also have to embrace that when we do that, none of this other stuff has happened yet. Okay? When you do this, you've got the swing high, you've got the low, and then you've got, as time unfolds, you can actually use this tool. You've got the retracement swing high. Okay? All right. Just as we had these various levels of the retracements, what this is telling us is where we might find acceptable spots on the chart that price will be drawn to, that we can enter a trade and use as price targets. So from the high to the low to the retracement high, okay? Right here, we hit the 38% price extension. But it keeps going down to the 50. Now, what does that 50% mean in this case? All right, the distance between this high, which was 28.85, and this low, which was 28.21, that price is exactly 50% of that distance. Now, it took quite a number of 30-minute candles to go from this price to this price. Over here, just so happens over here, didn't take nearly as long for it to go halfway, okay? But then it plows on through the 50, 62. Now again, before this happens, Once we have that retracement high that we can connect to, we're just connecting three things. The original high, the retracement low, the swing high, the move itself, the initial move, the retracement high. We're connecting those three things. And it's giving us these areas as potential price targets. Okay, so we can see already that it immediately dropped to the 38. If we can walk this over bar by bar, we hit this target. We not only hit this target, the 62, but we overshoot it, and it takes us down to, it's a measured, that's called a measured move. Now, you may find it very intriguing that this leg from this high to this low was exactly the same size as this high to this low. Well, be intrigued. I mean, it's a big enough deal that they actually gave it a name, a measured move. You may be familiar with this. A head, a shoulder, and a shoulder. I could go look for a head and shoulder setup, but I don't want to take up too much of your time. Now, price candles, of course, are doing their thing. All up through here. And then that's the highest candle. Then it comes back. Then it builds out this right shoulder. And this creates the neckline. Here's how the head and shoulder story goes. Price is climbing up. It consolidates, creating a shoulder. Then it keeps climbing until it peaks. That's the head. Then price comes back down, consolidates, builds a right shoulder. And then as price continues down and breaks this neckline like that, it's on like Donkey Kong. Now, what's the measured move? Well, from the top of the head to the neckline, you take that and you drag it down so that the head is now where the head is now at the neckline price. This becomes your target. That's a very simplified explanation of how head and shoulders are traded and what a measured move is. So again, some of you will find it incredibly fascinating that this initial leg went exactly identical, and then it turned back up and look where it ran. Okay, so that's how you use the Fibonacci extension tool. If you'd like a more detailed explanation, if you have more questions about fibs, if you have questions about our methodology or strategy, what we do, why we do it, that's always a great question. I love answering that question. Well, you know, I've been watching you on the internet now for a couple years, and I don't understand. I can see from watching it day after day that you actually do know a little something about what you're talking about, but why do you invest all this time and energy teaching other people how to trade? Book a session, I'll tell you. And I'll tell you this. It's not that same old tired answer that you get whenever you ask that question. Sometimes when you ask the question, the guru just bites your head off. But more often than not, you'll hear something like, well, you know, God's just been good to me, and I want to give something back. There's nothing wrong with that, but it sounds a little hollow, doesn't it? Or maybe it's just the markets have been so good to me, I just want to give something back. Hey, I respect that. And if that's all there was to it, that'd be huge. But you see, there can be that, and then there can also be the rest of the story, as Paul Harvey used to say. Okay, that sounds good, and I believe that that's part of why you do it, but what's the real reason? Why do you really do it? I'd love to tell you. Go to eminitrainingschool.com, eminitrainingschool.com. Book the mentoring set, book a free trial. Just take the trial, and then you'll immediately get a link where you can book a mentoring session. Now, I was going to show you real quick before I go. I wanted to look at the chart that actually started this whole conversation. Here it is right now. Crude. We all know what's happened with crude, I guess, the last couple of days. This is a 30-minute chart. I want to show you. I started out with a 5-minute chart. I was just showing a few thousand of my closest friends. All the opportunities just abound right now. And as a futures trader, it doesn't matter if the market's going higher or lower. As long as it's moving, there's an opportunity to profit. And so on a 5-minute chart, our textbook setup. Oh, did I mention that we only use one trade setup to trade every market? It's true. S&P, Dow, Russell, NQ, Gold. We don't change a thing. On a 5-minute chart, we had 1, 2, 3, 4, 5, 6, 7. We had 8 shorting opportunities during today's session to be short crude. And you might say, well, it's pretty hard, not to make money shorting crude today. Well, honestly, I've talked to a few people today who did nothing but short crude, and they lost money. Well, how's that even possible? Well, if you enter short right here, you're going to get stopped out. And if you enter short here, or here, or here, or here, or down here, you're going to get stopped out, right? So I know they say you can't time the markets, but we got a couple little things. I know a guy, right? And then there was one long 5-minute opportunity. But that's what got us even discussing the extensions. So let me go back to the 30-minute chart. Okay. Shrink it down. Okay. So I'm going to shrink it just a little bit more. All right. So from the swing high last night, from the swing high to the swing low to the retracement high, again, we're connecting those 3 points. 1, 2, 3. Price gave us a 24% target, a 38% target, 50% target, 62% target. It gave us a 100% measured move. If that doesn't excite you, please have someone check your pulse. Just kidding. Hey, thanks for tuning in. We're live every day, Monday through Friday, since 2005, from 12 noon to 2 p.m. Eastern. We also stream live, not only from our own website each day during the show, but we stream live here on YouTube, on Facebook, on Twitter. You're invited. You don't even have to take the free trial for that. That's open to the entire world. If you want to be in our training class, we do 2 hours of live training every day, Monday through Friday. You can come hang out for a week. Won't cost you anything. No credit card. To begin that journey, just go to eminitrainingschool.com. Stand by for the outro. This is where I tell you trading's risky. You can lose all your money and then some. It's a true story.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.